Well, shares of Target are rallying this morning. That's after posting earnings results that beat estimates and are being considered, quote, better than feared among analysts. But multiple headwinds are still up against the retail giant, including sales decline and higher inventory shrink like retail theft. Our Brooke DiPalma joins us now with more on this. Brooke, we knew that we'd been hearing about this in previous earnings call. What did they mention about shrink on this call?
Good morning, Rochelle. Well, it's important to note that inventory shrink is not just retail theft. In addition to that, it's organized crime, it's damage, vendor fraud, as well as other factors. But inventory shrinkage does continue to weigh on Target's earnings. And on a call with investors, Target CFO Michael Fiddelke said that growth in shrink remains a, quote, significant financial headwind. He also provided more color when asked if the retail giant started to flatten the curve on shrink.
In the third quarter, we still saw year-over-year pressure, so about 40 basis points of year-over-year headwind. That's less pressure, relatively, than we saw in the first 2 quarters of the year, and it was a little better than we thought it'd be. And so those are, encouraging signs of some progress in the right direction, but to be clear, still a year-over-year headwind in Q3. And so, as we've said before, shrink's a lagging metric.
And to make that ultimately very clear, it's still a headwind compared to last year, but it is starting to moderate compared to the first half of this year. He went on to say that it's important to note that this does not mean that Target has turned the corner on shrink. And he added that they'll continue to watch these trends very carefully, as we here at Yahoo Finance are as well.
So what does that ultimately mean in terms of what Target is doing to combat the issue?
Yeah, Keiko. Well, we know back in October, towards the end, on October 21st, they closed 9 stores across the U.S. Now, Target claims that they closed those stores because they were contributing to unsustainable business performance, and ultimately theft and organized crime were threatening the safety of their team as well as guests. But we know at large, in addition to that, this is a $112 billion problem for the industry. And so we've seen Target add other methods like locked cases, more security at stores, and cyber defense technology. But what we've heard from other executives like Walmart is that typically when there's more inventory in stores, there's more shrink, there's more theft. And so that's ultimately contributing to the problem as well. And what we've seen Target do is really combat their inventory issue that they had last holiday season. They did see inventory drop 14% year over year. Now they're really working to create a more efficient inventory management system. So those are just a few ways that Target's combating this.
And Brooke, we have to talk about how the stock has been moving, especially since the earnings were released. Break that down for us.
Yeah, well, Target stock right now definitely is soaring. If I see it right here, it's up roughly 18%. It's also on track to have its third best day ever. And this is largely because, as you noted earlier, Rochelle, that this was a better than feared performance in seasonal, back to school, and holiday assortments. They're also working on creating a stronger inventory management system. And the company said that it does expect the holiday quarter to look roughly the same, with comparable sales in a range of around a mid-single-digit decline. And so really Target painting a clear picture for investors here, setting the story straight, and we see Wall Street applauding that today.
Yeah, nice pop, but on the year still down more than 12%. Worth noting. Reporter Brooke DiPalma, thanks so much for breaking it all down for us.